We have to talk about gold. Gold just hit record highs, then days later had the sharpest one-day crash in decades. I don't really understand. Gold? Are people plundering doubloons? Let me explain what gold is, my gold strategy, and whether you need to start doing whatever the this is, or if you missed your chance. Gold is an asset class. Not the hard kind where you do Bulgarian split squats and finally understand Drake, but a group of similar kinds of investments. Think real estate, stocks, bonds, or emotional baggage. Investors include various asset classes in their portfolio to diversify and gain unique benefits from each. When you own property, tenants thank you for your selfless service with rent, so you get money and gratitude. When you buy stock, the company might pay you dividends, so you get a little allowance. If you buy government bonds, you earn interest. As an asset, gold is weird because it doesn't generate cash flow, it just looks incredible. So why would anyone buy gold? Well, let's hear what Ray Dalio, founder of Bridgewater, one of the biggest hedge funds in the world, has to say. Ray?
Gold is the reliable 2 a.m. booty call. I'm Ray Dalio, and this is my favorite store on the Citadel.
Gold is considered a safe haven asset, something that retains its value during periods of financial stress or political tension. Wars, sanctions, tariffs, political instability, financial crises, these things tend to seduce investors into gold. Certainly none of them sounds familiar in 2026. And despite my witty and erudite pirate joke from earlier, you can purchase gold from your computer the same way you buy stocks or Panderpants. You don't need to store gold in your basement or a desert island physically. Though if you're Indian, you might actually have a lot of gold in your basement. Now, the obvious reason for gold's value is that I've loved jewelry since I was a kid and have no impulse control. You're welcome. No, it's simple supply and demand. There's a limited amount of gold in the world and it has real uses. It's essential in electronics, the White House now apparently, medicine. So what has caused gold to more than double in price since 2023? These guys?
Where's my fucking money, motherfucker?
Historically, gold was insurance against the erosion of currency value. You might have heard that gold is a hedge against inflation. I didn't even know inflation was a plant. Now that doesn't really work. Bush, shrub. Wow, I can't believe I didn't have anything for this. A hedge is a way to protect yourself from financial loss if something goes wrong. Let's say you have $100 to bet on a coin flip. If you bet $100 on heads and you're right, then you can retire early. If you're wrong, you lose everything. If you bet $80 on heads and $20 on tails, if heads wins, you still make money, and if tails wins, you don't have to download Tor. That's a hedge. When investors hold gold instead of putting that money into stocks, real estate, or King Nioh coin, trademark coming soon, crypto bros hit me up, they forego some growth and income in exchange for protection against instability. Think about it this way. If there's inflation, the $100 that you won in the coin flip could have bought a 4-course meal last month, but today it only buys a Big Mac. Maybe next week it only gets you a small soda. And you want your investments to be in something that holds value. Gold is supposed to do that. Fun fact, the dollar used to be pegged to the price of gold. Not like that, you deviants. You could take dollars and swap them for gold. That ended in the 1970s. So as a currency devalues, also called debasement, and investors don't trust it will store value in the future, they might move some of their investments into gold. Fiat currency, which is what we all use daily, and what crypto bros promised would fall apart in 2022, like the dollar, euro, pound, yen, kroner, is backed by nothing but trust that the government will not turn into a poopy dystopian hellhole. If America decided to print $500 trillion and drastically inflate the price of everything, you can't take your paper money and exchange it for something valuable. You just have to trust they won't do that. Right now, the US is literally printing billions of dollars and has a laughable deficit. The debt crisis in Japan is trying to go triple platinum. Probably. It's in Japanese, so no one really knows. And Trump claims that it's great that the dollar devalues to 4-year lows, so, how much trust do you have? When a government has a large deficit, it means it spends more than it collects. It's in debt, and it has to pay interest on that debt regularly. Imagine you ask me for 10 grand, but you only make $20 a month. Classic you. And I've just had a stroke or something, so I say yes, but you have to pay 10% interest per year. So after 1 year, you owe me the original 10 grand plus $1,000. But you don't have the money because you make $240 a year. So after a year, you borrow more money to pay me what you owe me, and now you have to make even more interest payments every year. Governments with lots of debt have only a few options to escape this death spiral. Simply grow out of it, which is hard, and in this example would be like you getting $1 million a year job, cut spending or raise taxes, which is politically disadvantageous, or let inflation do part of the work by reducing the real value of what they owe. $1,000 is a lot when $1,000 buys a new computer. $1,000 is not a lot when $1,000 buys a single sock. Therefore, gold. Remember central banks? Oh, but you promised you watched my videos. Mom, they promised they watched my videos, but they didn't. Central banks are another reason the price of gold has been increasing. Hey, boys and girls, are you ready for a history lesson?
Yay! Old things that nobody cares about!
After World War II, the US dollar became the world's reserve currency through the Bretton Woods system, where we kidnapped foreign leaders and abandoned them in the Bretton Woods with bears and blindfolds until they agreed to peg their currency to the dollar. Stop. Thus, global trade and central bank reserves became built around the US dollar. Often when countries do business, let's say Vietnam and Brazil, they don't exchange Vietnamese dong for Brazilian real. The transaction is priced and settled in US dollars. You can think of the dollar as the world's default money. Countries trade in it, borrow in it, and hold it as a safety asset. And for decades after Winston Churchill got eaten by a bear, central banks held dollars as their primary reserve currency, and it was perceived as safe. But wait, you say, eager to upstage the professor and relish the ceaseless reverence of your peers. What if a US administration's f***ery made central banks question America's economic dominance and dollar safety? Well, central banks might not be thrilled about keeping their savings in dollars. They might start buying literally tons of gold a year. Now everyone clap. But this global de-dollarization extends beyond recent tensions. When Russia invaded Ukraine in 2022, the US froze hundreds of billions of dollars worth of Russian foreign exchange reserves. And you'd think Russian assets would be used to the cold. I mean, imagine if your bank could say, nah, we're not gonna give you access to your savings account because we didn't like you invading a sovereign nation. Or your recent tweets. You'd want to store your savings elsewhere, right? Even US allies saw that assets held in dollars could be rendered unusable overnight for political reasons, and they began reducing their reliance on the US dollar. So countries are slowly taking money that used to go into dollars and buying signet rings. In short, global instability is causing investors to look for something that will be valuable regardless of what's currently happening. Which is why the Bank of Japan just subscribed to King Nioh. I mean, just open the news and take your pick for why. But if you look at the graph for gold prices, it becomes a straight line, and that's not normal or good. Typically, that kind of meteoric rise implies it's overvalued. I mean, think about it. Is the world twice as unstable as it was a few years ago? Actually, it sometimes feels that way. Even so, gold is not the only asset class that's a hedge against inflation or facilitates de-dollarization. What about silver or copper? What about oil? What about AI OnlyFans models? Those are good points, King Nioh. Magnificently explained. You know what else? There's no real alternative to the dollar as the world's reserve currency, and it's still about 58% of foreign exchange reserves. You could argue it's not going anywhere. Valuation models that are boring and math have indicated gold is overpriced. Retail investor interest in gold has surged, which means it's already too late. And furthermore, buyers expected the Fed to continue cutting interest rates and raising inflation, but the Fed recently kept rates the same, which weakens the need for an urgent hedge. What else? Gold is good when real interest rates, which factor in inflation from bonds, are negative or zero, but they aren't right now, so you can still buy government bonds and make money. And Trump's unpredictability goes both ways. The dollar could strengthen over the next year. Who knows? Furthermore, investors aggressively took profits from gold already, and the price has been dropping like gym memberships after January. So what does this mean for you? Well, this has been one of the most volatile periods for gold ever. It's trading like a meme stock, which typically means if you're not the rug puller, you're the rug pulley. But who knows? Gold could go back up. Despite there being no feasible alternative to the dollar, central banks are likely to continue accumulating gold, and you can't just summon high-quality gold like a Final Fantasy character. It takes years to build mines, and ore grades are declining globally, so it's harder to get S-tier gold. With central bank and ETF buying removing supply, theoretically, the math supports higher prices to balance supply and demand. And though the real interest rates from bond we just talked about is positive, it is low. So the opportunity cost of holding gold isn't terrible. And maybe most importantly, the US government debt shows no sign of slowing down. So the debasement argument still stands, and global uncertainty is still very high. I can't and won't tell you what to do. Historically, a small sleeve of gold in your portfolio can reduce volatility and boost returns during crises, but timing matters. And if you bought at 5,500, then, well, now you're in it for the long run, I guess. Welcome to the casino. If you have no exposure to gold, I guess you could dollar cost average in now. I bought gold a bit before this craziness and didn't sell when it was at the top, so I'm holding because I believe it will rise and it's absolutely not copium whatsoever. You could also make the argument that if we need gold, society's f***ed anyway, and there are plenty of other alternatives to accomplish the same objective. If you believe that global uncertainties will persist or worsen, then holding or buying gold could be justified. That's all. But, depending on how lazy I am with editing, which is probably going to be pretty lazy, Nioh 3 might be out by the time you watch this, and if you like action games or just games in general, I couldn't more strongly recommend you give it a try. This video isn't sponsored, but it could be. Team Ninja DMs are over here. But there's a demo you can try and see if it's for you. Anyway, like, subscribe, all that. I'll see you next time.